So, good day, traders. Welcome to another edition of Wednesday live session. Today, I'm going to focus attention on top-down analysis. All right, top-down analysis, and you might find many top-down analysis everywhere, but my own top-down analysis is a special one, guys. It's a special one because I'm going to be combining a lot of systems together in my top-down analysis. I'm going to list them here real quick. My top-down analysis, I use the following techniques. I use Elliott wave theory, which you will see as I will do. Number two, I use demand and supply. Number three, I use support and resistance. Number three, I use support and resistance. I use market structure. I have to write 4, guys. 4. I use market structure. I use 5. I use liquidity, and then 6. I think I remember 1 is liquidity, is market structure. I use number 6, market variation or market behavior in relation to session change. Right, these are things that I use, guys, in doing my top-down analysis. And what are the tools that I use? Tools for my top-down analysis. What are the tools, guys? I use number 1 is Fibonacci. Number 2, I use divergence. Okay, I use Fibonacci, I use divergence. All right, I don't use trend line, I use all those stuffs. Use Fibonacci, I use divergence. These are the tools that I use so much when I'm doing my top-down analysis, guys. So let's just push this one. Oh my God, sorry, guys. Come up. Okay. So let's push this one to this side, guys. So as I'm using another tool I use, I have to include this, guys. I use stochastic. Number 3, I use stochastic and stochastic RSI. All right, these are the tools I use. Okay, so each of these has their own has its own advantage. All right, when I want to do my forecast, when I go to daily time frame, guys, I want to listen to me very well. It is not what we are doing today. It's not breaking down the chart because we want to make money. It's retraining that you ought to go and pay for elsewhere. That's what we are doing here. Okay, so when you look at it this way, I use Elliott wave theory. Where do I use Elliott wave theory? I use it in my forecast. Okay, so I go to daily time frame. All right, when I look at the market, let's shift this one here real quick, guys. Okay, we'll make reference to it at the right time. Okay, I don't have intention of analyzing this market. Since that's where we are, we can analyze anything at any point in time, guys. So when you look at this market right now, you can see that this is a move that has come here. All right, and you have all this move. It's just correction to the downside, So what do you need? You need this move to the upside to form a structure. You understand, guys? To form a structure. Okay, you need this move to the upside. If you want to know why this move to the upside should be there, then you need to go and study my Elliott wave theory course. You see why this has come. This is A, okay, this is B, and this B has come to break this low. Then you need this C to break this high. If you break this high, it becomes expanding flat. If it doesn't break this high, it becomes a running flat. But right now, it's at the middle. So we need more upside. Okay? We need more upside. Can you see? I've used my Elliott wave theory, to look at the immediate and long-term direction of this pair. Okay? So now, on daily time frame, I want to look at Fibonacci to look at the extent of retracement. What's going on? I want to look at the extent of retracement that we need to expect as far as this pair is concerned, guys. We want to look at extent of retracement. When you want to get the extent of retracement that you need, what you do to find out that is by using Fibonacci. Look at Fibonacci here. If you come here, you see Fibonacci Fib retracement. Pick it here. Look at this leg to the upside. Pick it from the beginning, drop it at the end. Okay? You want to measure where you have 50 to 61.8, guys. You want to measure that area. Can you see it here? 50 to 61.8. This market is possibly going to crawl to this level. And then what gives me impression that this market gradually will come to that level. Now, just note that area, 61.8 to 50%. Note that area, guys. So what gives me the impression? We are going to do a bit of wave theory analysis right here, real quick. All right, real quick. There is what is called a leading diagonal, which if you study my course, you are going to see it. This is a leading diagonal. A diagonal that can appear in wave 1 of an impulse is a leading diagonal. A 5-way structure, which is a motive wave, and a diagonal that is occurring in wave A of a correction is also a diagonal. All right, and here, right here, real quick, guys, you are seeing a 3-wave structure. 1, 2, 3 to the upside, 1, 2, 3 to the downside, and an impulse. 3, 3, 5 structure. If you listen to my Elliott wave theory course, you will know that 3, 3, 5 structure is a flat corrective structure. But do you notice something here, guys? You see the A here, you see wave A here, you see wave B here of a correction, you see wave C here. What do you notice, guys? Look at here, the start of A, look at the end of B, it has broken it. And then the end of C did not get to the end of A. This one is therefore a running flat. Okay, watch my video, the one I dropped today, you understand what I'm talking about. This is a running flat. So what are we expecting, guys? This wave that come to the downside, that make a big A, then this corrective structure make a big B, and then we expect this one to now come gradually to the downside. Okay, at that level that we show, 50 to 61.8 of the impulse. You remember? Let's do it again. From here to here. Where is 50 to 61.8, guys? Look at it inside this circle, not here. Not here, guys. Not here. Inside this circle, we want this market to come there. Do you get now? So you can see that on the daily time frame, I have already finished the job. I have done what? I have finished the job. All I want to see now is to see, a sell opportunity at this level for me to sell to the downside, because I know I'm going to break this low by virtue of this analysis. So let me clean up. Now, all focus is there. Remember, you have identified this level. That's where you are going based on weekly forecast, on a daily forecast. Now, step it down to 4 hours. Ask yourself, are we on, where are we on these 4 hours? You see that on these 4 hours, real quick, guys, you see that these always identify patterns. This is a pattern. This is another running flat, guys. You see it? This is another running flat, guys. All the practical application of Elliott wave theory, I'm going to be doing them for you on Wednesday live session. All right. So I'm not going to do any special video for practical application. We are going to be doing it together. You see, with A of a correction, with B, and then with C. But you see, look at the start of wave A, wave B has come to break it. So supposing this wave C break the top of this wave A here, it will be an expanding flat. But because it did not get there, it has become a running flat. Look at it, a running flat. And then you have a push to the downside. This is an impulse. And then when you take a fib, if you want to know the level of retracement of any impulse, you take a fib and you determine the correction. Look at the correction. It has hit 50 to 61.8. But I told you, anytime you see wave A of an impulse that is wave A of a correction that is very strong, you know that you are going to have a flat correction. If it's very slow, if it's very slow like this, you know that it's going to break down. But if after making the impulse, it make another impulse, know that this correction will come and this impulse will come. And in this case, it has formed a flat corrective structure. And you now take your trade to the downside. Is that clear now? So that is why when this one came and it was very strong, we know this move down to the downside will come, and this one will come right away. And this one has come to 50 to 61.8. So now, at this moment, we are very sure that our downside setup is confirmed. So the next thing we have to do now is to analyze this portion. Can you see we are getting closer and closer to the market, exact market price? We started from daily, we came down to 4 hours, guys. Came down to 4 hours, and right now we are going to go to 1 hour. You see, so you can see that this is a supply area. From here to here is a supply area. How do I determine this supply? You remember, I've cleaned up all the requirements that I showed you. All right, when you are watching the video again, you can write them down yourself. Okay, so you can see I have applied Elliott wave theory. I'm still applying Elliott wave theory. Now I want to apply demand and supply right now. Where is the supply area where I want this market to get to flush down? This is how to determine a supply area. When you get to the impulse this way, look at the candle that formed before this big bearish candle. Guys, it is not $10 billion that pulls this candle down. All right, it is not $10 billion. You should be talking of $100 billion to $300 billion and above that will push it down. All right, like this. So it's not a small order. All right, should be talking of like a 100,000 lot size, if not 500,000 or 1 million lot size that will push this market down. So you now want to spot the candle before that big move. Look at this small candle here. That's why I put my line here. Look at the candle that formed after this big move. Look at where it ended here. That's why I put my line here. So between this price 0.6255 and 0.6332 is a supply area, and market can move down from this area. This is what is called supply. Can you see? I've moved from Elliott wave theory, I've moved down to supply. Okay, so now that is 4 hours. We have seen a big move, impulse down. We have seen correction. We now want to see continuation, since overall bias on the daily is to the downside. So what do? We go to 1 hour time frame. In 1 hour time frame, we want to see market structure. We want to now come and use market structure to enter this trade. Okay, what is a market structure? A market structure, depicts the flow of the market, all right, in terms of downtrend or uptrend or consolidation. So for an uptrend, you have a structure like this. Okay, watch my video on understanding market structure. For downtrend, you have a structure like this, okay? And in most of the cases, when a market breaks a structure, wait, let me show you what a structure is. In this market, these are structure, all these turning points, apart from the flow of the market, these are structure, okay? These are structure because it is this turning point that actually give configuration, that actually give, you know, that actually depicts the structural pattern that you are seeing. If not because of this turning point, you can't make sense of this market because it's actually going to be, this one is actually going to be like this. You can't make sense out of it. It is this turning point that actually give you a sense of structure in the market. And then when you are going in the uptrend, there is actually, when you locate this swing point, and you will notice that immediately you have a push to break this high, market has broken a structure. Where is the structure that is broken, guys? This resistance, this resistance is broken. And then for you to now buy, you now have to take a fib of this leg, allow this market to come to 50, let it push down to 50 or 61.8. That is your buy opportunity to the upside. Can you now see? So if this, you know, if this structural break does not happen, you don't have a trade. The same thing is applicable for a downtrend. These are structure that I have circled in yellow. So in a downtrend, you see that this support here, right? Okay, this support here is broken. Where is it broken? See this market, this one has broken this level, has broken into the downside. And as soon as it broke into the downside, let it start retracement. Once it starts retracement, it means this impulse is over. You now have to take a fib from here to here, where you see 50 to 61.8. All right. When you see 50 to 61.8, you now look at left. Look at that impulse that forms. This thing is too. Okay, let me do it this way. Okay, look at it here. Look at the support. Okay, now when you break it to the downside and it starts a retracement from this level right here, real quick, I'm going to show you now. Just hold on. It starts retracement at that level. You know that this impulse is over. So what do you do as this impulse is over, guys? You take a fib from here to here. You now identify 50 to 61.8. Where is it, guys? Look at it here. Okay, and you're going to ask yourself, now remove the fib. Remove the fib. Good. You now ask yourself, as I have come to 50 to 61.8, I'm not going to take this straight to the downside blindly. I'm going to check my left-hand side. Where is the move on the left-hand side? Look at it here, guys. At the point where you get to 50 to 61.8, if you look left, are you able to spot supply? If you are able to spot a big move here, then you know that this move is going to work. But if you are spotting consolidation here, guys, know that this thing is going to push more to the upside to go and catch liquidity as supply. That is how you look at price behavior. So the same thing you're going to look here, guys. So here, this wave seems to have ended. You have what is called engulfing candlestick here. Okay, I forgot to tell you that's part of the tools that I use when I'm doing my top-down analysis. I want to look at engulfing. Look at it here. You see engulfing here. Well, you see engulfing here. You're expecting this. So now, but we are not going to just jump in 1 hour time frame. We are seeing this. We want to see a break of structure. So we can go to 15 minutes. Can you see? We started our journey from daily. Right now, we are in 15 minutes. Okay. It's because I was not active in trade. So Dave, now I will have called this entry right from here because I told you once you see consolidation, a pull up to supply, next thing is to make a boom to the downside. But right now in 15 minutes, where we want to catch a neat entry for this trade, guys, what are we supposed to do? You have a move down here. You have a move down from here, guys, to here. This is an impulse. And remember, if you want to take your fib, many people normally make a mistake. They will take their fib and start from here, and they are taking it down here. No, you are making a blunder. There's what is called orthodox bottom and orthodox top. What do I call it, guys? Orthodox top and orthodox bottom. Okay? So if you look at this market right now, real quick, guys, This is the orthodox top. This is this impulse that goes up. This is where it stopped. You have a retracement here, boom to the downside and boom to the downside. This move to the downside is part of a corrective structure. This move to the upside is not part of this impulse, guys. So if you want to measure this fib of this impulse here, it's going to be from here to here, because this is the orthodox top, not here. Okay, that's number one. Number two, if you come to this place, the down move is between here and here. This is the orthodox bottom, guys, because correction pullback has already happened. So this is part of the corrective structure. So what you are looking for right now is a move to the upside to now create a structure like this. Can you see? This is an expanding flat, and at 50 to 61.8 here, you find a sell opportunity, boom, to the downside. So what did I tell you to look forward to? If you get to 50 to 61.8, you're going to look left and see whether you have a excess supply over demand. Right here, real quick, guys, you have excess supply here over demand. What do I mean by excess supply over demand? Look at this candle, red. Look at it, big red. Look at this candle, big red. Look at this candle, big red. So there are big orders for sell that were, were sent to the banks. All right, at this level, 62.50. You also want to check psychological area that corresponds to the fib level of 50 to 61.8. Look at it here, 0.6252. I'm not going to buy this pair guy and sell this pair guy except it pull up to 0.6250. If it comes to this place, I put my stop loss here, 50 pips, max 30 to 50 pips, and I sell this market to the downside. Can you see now? Can you see how we do top-down analysis? So when you enter from here, guys, you are not going to, at least minimally, even if the market will still go to the upside, it's going to push you at least to this level, to this level. When it gets to this level, I will expect a reaction here. Why will I expect a reaction here, guys? This is what is called another block from here to here. Where is the last candle before this big move to the upside? Look at this small red candle. So if you mark that level of that small candle, that small last red candle before this big move, if you mark it, when the market gets to that place, when it sells to that place, it's going to react. Because remember, it is in the book of the bank that many people place order for a big move from here. Even if the market is to still go to the downside, you see an order, maybe corrective structure before it will push down. Do you understand, guys? So I have given you a setup for NZD CHF. I've given you a setup for this and following my techniques on top-down analysis. And you can see I've made use of Elliott wave theory. I've made use of demand and supply. I've made use of liquidity. Look at liquidity grab here. Let me clean these ones. Okay. Look at liquidity grab here. See, you have this, boom. That's liquidity. I've made use of liquidity. I've made use of Fibonacci. The only thing I have not made use of, guys, is RSI and stochastic RSI, which I'm going to use real quick, guys. Okay, I'm going to use it now, and I will prove something to you. I'm going to prove something to you. Do you notice something, guys, that in this 15 minutes time frame, what do you notice? Look at this point. Look at this point. Come to RSI, guys. Look at this point. Look at this point. What do you notice? This one is making a lower high here. Can you see the trend is continuing, making a lower high here? Look at the indicator here. What is it making, guys? It's making a higher high. A higher high. So that tells me that this corrective structure here is over. Is what? Is over. It tells me the corrective structure here is over. And I now come and take a fib from here to here. This is the orthodox low. Remember what I taught you guys, not putting a fib here? No. That is why if you put the fib here, do you see that this market passed 50 to 61.8? It passed it. Okay, but if you put it in the right place, which is orthodox low here, This is the orthodox bottom here. If you put the fib here, where is the turning point? Exactly at 0.618. So guys, listen to me. I'm teaching you raw here. I will teach you what you don't hear anywhere. It's not a matter of pride. No, I'm teaching you raw. You go to YouTube, you won't find some of these. I discover most of them by myself in the course of my research. Do you understand now? I have borrowed this idea of orthodox top, orthodox bottom from Elliott wave theory, and it's perfectly useful for us here. Can you see? So now this market has hit exactly 61.8 here. What did I say you should do when it hits 61.8, guys? Look left. How do you see the market there? Completely excess supply over demand. No green candle at all. All red candle. That tells me what does that tell me? This market is going to go to the downside, straight on. But because this one is coming correctively, I know that upside is imminent. Why? Because you can't get a big order here, and then you are not moving fast. So if you are moving slowly, it means that the order you pick here is too small. It's too low. That's why you are not moving fast. Okay? And that is why this fast move to the upside is necessary to grab this liquidity and you have a move. All we want here is corrective structure. You won't lose this trade, guys. You won't lose it. All you need is corrective structure. Okay? Because we have analyzed right from daily time frame to the time frame that we are right now. Do you get it now? So that is it about top-down analysis. Let me do one more top-down analysis, guys. I'm going to do one more for you. Clean this, go to daily time frame. Okay, daily time frame. Okay, so if you look at this market right now, you first of all look at the market. Where is the impulse? Where are the correction? You see, you need to watch my wave theory course, guys. It's very, very important for you, because I can't just imagine how somebody we understand where the market is going without the idea of Elliott wave theory. It's going to be very hard, because at times what you think may not be what you see. Do you understand? Now you have a big push here. Can you see? Right here, you have a move, you have a move, you have a move. This is a corrective structure. Okay, but what type of corrective structure is this? This is a zigzag corrective structure. It's contained in the video I sent to you today. This is a zigzag corrective structure. Why is it a zigzag corrective structure, guys? You have a three-wave structure here, 1, 2, and 3. You have a three-wave structure here, 1, 2, and 3. Then you have 1, 2, 3, 4, 5. This is 3, 3, 5 structure. 3, 3, 5 structure. Am I too fast? Somebody is thinking within his mind, this guy is too fast. Does he think we know Elliott wave theory before? Okay, no problem. I'm going to slow down right now. I'm going to slow down. This is a corrective structure in the middle. This is a push. This is another push. That's 3 waves. This is a corrective structure in the middle. This is a push down. And then this is a 3 waves here. Push down. 1, 2, and 3. This whole corrective structure is 1. When I say 1, so this one is A, this is B, this is C. This is A, this is B. Why is it B? B is always 3. 1, 2, 3. B is always 3. 1, 2, 3. Do you see? And then you have C. Okay? And so this one is big A, wave that has finished. This is big B, wave that has finished. And then somebody is sending a message. What is he saying now? Sorry, sir. Isn't zigzag structure 535? Okay, I'll answer to that. I'll answer that. All right. So let's go. This B, and then you have a C corrective structure here. Okay. So, all right. So why did I classify this as not a flat and a zigzag? The reason is simple. In a zigzag, in a flat corrective structure, this level here, oh, it really got there. Sorry, guys. It really got there. It's more than 50%. It got there. Thank you for pointing me to this. it broke it and it came to the level. This is a flat. All right. If you look at this market, let's test it. Can you see that this one has come to this side? It has even broken it. Do you see it? The end here. Do you see? Let me clean this one. Let me delete this one rather. Let me delete so that you see it. This is an expanding flat, guys. Can you see it? Let me see. You see it? Do you see that this candle right here? Look at it. It broke this level. Even though it's 5 pips, it doesn't matter, guys. Even though it's 5 pips, it has broken it. So we have broken the start of A, B here. This B has broken the start of A, and then C has broken the end of A. C has broken it. So this is an expanding flat, which is a what? 3, 3, 5 structure. Thank you guys for pointing my attention to this 3, 3, 5 structure. So that is number one. Number two, you want to find out what is the fib level of this impulse. As it got to 50 to 61.8, fib it to the downside. Can you see? Where is it turning, guy? Exactly between 50 to 61.8. GGA is turning down. Do I have another proof to show that this market, GGA, is going to come down? Oh, yes. This is a consolidation at a resistance level. And after the consolidation, I told you, when you are having consolidation and you break to the upside ferociously, know that you are going to come down. The essence of this move to the upside is to grab liquidity. That is all. That's exactly what you have seen here. So what do you see? You have consolidation, you have a break to the upside, and now having a come down to the downside. So all we need to see is corrective structure for us to take it to the downside. So that is number one. You have done your homework, you have done your forecast. Remember, before you do all this technical analysis, you must have gone to do your fundamental analysis and to give me reasons why GBP must weaken. Of course, you know what is happening in Britain right now. Britain, you know what is happening right now? Inflation. Inflation is rising very hard. Things are very difficult right now because of inflation. So when there's inflation, before interest rate is increased to mitigate it, the value of the currency will drop. And let me tell you, even if they raise interest rate, GBP might just strengthen for a while and drop again. Why must it drop again, guys? Because the reason why interest rate was increased to mitigate inflation is not because that inflation was caused by increase in productivity in the economy. It was caused by another problem, which is Russia-Ukraine crisis, which caused a lot of problem in the market, supply gap and everything, humanitarian crisis that they have to attend to, this and that. It was all, energy supply, gas supply. These are the things that are causing inflation. It's not necessarily that it is caused by a result of increase in productivity that is putting money in the hand of the people. So when inflation arises as a result of, low productivity, there's low productivity, but there are some other external factors that cause that inflation. Even if you increase interest rate, the value of your currency will not strengthen, because who want to go and put money in an economy, that is almost that is bedeviled by inflation? You know the implication of inflation. Your money will weaken. So if you are putting interest rate, it's just a temporary solution until you make until you increase your productivity. And if that inflation is as a result of increase in productivity, then no problem. I can invest in your currency. I can invest in it because I know that that increase in the value of the currency is going to be a sustainable process. Do you understand now? So we are looking for downside in GBP, even if they increase interest rate. That is one. So now we have to go to a smaller time frame like H4. Okay, H4. Let's close these ones. So we are not concerned with the entire structure again. We just have to analyze this H4 as we see it, guys. Have to analyze this H4 as we see it. Okay, so the structure I am thinking will happen there are two structures. Number one, what do you see it here, guys? I've always been seeing running flat since we started this class. This is a move to the downside. This is a running flat in the middle. You may have 1, 2, 3, 4, and 5. This becomes a flat, this becomes a three-wave corrective structure in A, in B, and in C. And I told you B is always in three waves, 1, 2, and 3. And inside these three waves, 1, 2, 3, and again, you have small a here. Let's say A prime, you have B prime, and you have C prime. Go and check it. This B you see is in three waves again, 1, 2, and 3. B is always in three waves, and A is always equal to impulse, A equal to impulse, B equal to correction, and C equal to what? Impulse. What do you see here? Impulse, strong. What do you see here? Impulse, strong. What do you see here? Weak, corrective structure. Can you see this logic, guys? So Elliott wave theory is close to perfection. It's not perfect, but it's very close to perfection. And that is why I still tell you it's very, very subjective. All right. Okay. So another proof to show that this market is going to come down is we got to go and carry out what is called divergence test. We need to carry out what is called divergence test. We want to look, let's clear this one. We want to look at what we call, bearish hidden divergence, because we are going down here. We are bearish. We want to look at bearish hidden divergence. Look at this top here. After this market pulls down, you have this pullback. This market pulls down to break this low, you have this pullback. If this is a true running flat, what is the test of it? It is contained in my video, guys. It's contained in my video. This is a discovery that is powerful, guys. If this is a running flat and we have to expect this move to the downside, what do we see? I will show you now real quick. That one, RSI will handle that. You have a high there. You have another high here. This has made a lower high. Corresponding level of this high here, you have it here. Then corresponding level of this high here, you have it here. What do you see here? This one is making a lower low here. This guy here is making a lower low. So you should expect that this one should also make a lower low. But what did it do? It make a higher high. This is the only test. This is the only test that a running flat is confirmed. This is the test that confirms that a running flat is confirmed, that is not going to transform from a running flat to what? To an expanding flat. In my wave theory course under flat corrective structure, toward the tail end of the course, you are going to see what I call structural transformation of flat corrective structure. No, I don't put structure. I cancel that structure. Structural transformation of flat correction. That's how I put it. If I put structure, I'm repeating it. You may not find this in any book. The origin is from me. That's what I want to tell you. That's why you may not find it in any book, because I have developed some of those theories, some of those techniques, some of those rules that work for me. I've put them together, and this YouTube is bringing them to you free of charge. But it's going to be for a moment. Later, I'm going to pull down all the videos there and put them into private, package them into a course. So it's free for you now. Watch as many times as you like. Keep watching. It's for you, free of charge. All right, because I'm still working on the development of many other contents. Okay, so this is the test for what? A completion of a running flat. And then at this level, since this guys has made a higher high than this, what is the implication? It means that even though the market is giving me a lower high here, but the algorithm, let me say, the computer, this RSI is generated by computer, by calculation, is telling me that even though this market is making a lower low, is actually giving us a better price to sell. That is why this one is at 68 and this one is at 56. So it has pushed up to give me a premium price. It's telling me that even this price here is a better price than here. That is why this RSI is higher than this one. So that is why you see this market make a push down. And after it pulls down, what do you see? Let's go to 1 hour time frame. We're going to see something real quick, guys. 1 hour time frame. What do I tell you? Now we are edging closer and closer and closer to the setup. 1 hour time frame. Take this impulse, take it to here. All right, where is 50 to 61.8, guys? This is 50 to 61.8. All right, but I will show you something real quick, guys. 50 to 61.8. But when you get to, anytime you get to 50 to 61.8 and you are seeing a corrective structure, look at it. When you are seeing a corrective structure, do not sell. When you are seeing a corrective structure, do not sell. I repeat the third time. When you get to 61.8 and you see a corrective structure, do not sell. Why do I say do not sell? Because it's possible that the corresponding level to the right, you are seeing bullish and bearish. So that is not the right place where this market will sell. Look at the only supply zone here, very tiny zone from this candle. I've told you how to spot it. Tiny zone, and you are seeing consolidation here. This was the same problem that the same mistake that a friend of mine made on Euro JPY. He has a community of over 38,000 and he was giving it sell, and I was crying within me. I said, no, no, no. This will not sell because you are having a consolidation at resistance. You are having a consolidation at 61.8. So that consolidation must break up to grab liquidity. Look at the supply that the liquidity is taking. Over here, this consolidation, equal high, must be taken. Can you see it's taking? That's number one. Do you see this pullback here? Is a problem for the sell. That pullback is also taking to the upside. Look at it. The market came here. What do you see? Boom. Do you see it now? So the next thing you are expecting here, real quick, guys, is if you take this one is coming down. This is the orthodox bottom, and then you get 50 to 61.8. It's right here, guys. It's right here, 50 to 61.8. The market has gotten there. What do you see? Boom. Here is not sharp. Supposing here is very sharp, then you must be expecting corrective structure here and a move to the upside before you see the downside. But because, guys, here is this one is not very sharp. Okay, this is not an impulse. It looks like a three-wave structure, and that is why this one is pushing down. And you can see if you compare this one and this move together, you see that this one is more impulsive than this one. For that reason, this one will be taken as a correction, and this one will be taken as a move to the downside. Except something can happen. What is that thing that can possibly happen? That thing that can possibly happen here, guys, is if this is a three-wave structure and this is the A leg of wave B, and you have this one slow down here, pulls down to form, this is A, this one form B, and you have this one push up here to form C. This becomes a corrective structure for what? This is a pulls down, so I will now push down. Okay, so I will now push down to the downside, but I don't think it will happen. All right, so instead, what I'm envisaging right now in GJ is simple. What I'm thinking is simple, because right here, let me show you really quick, guys. Right here, you have a move to the upside. You have completed this running flat here. Okay, if that running flat is complete, you have this, you have wave 2, so this wave 3, 1, 2, 3, 4, and 5. Okay, so this is going to be let me write it here. This is going to be wave 1 of a continuation. It's going to be wave 2. Remember, the rule for wave 2 when we're discussing impulse is that wave 2 must not come to the beginning of wave 1, which is it has been fulfilled. And then this is going to be wave 3, guys. And then the wave 3 here, we're in wave 1 of 3, we are in 2 of 3, you have 3 of 3, you have 4 of 3, you have 5 of 3. And this will complete wave 3. Then in that case, at this level, you look for a corrective structure here to be this wave 1, this big wave 2, this is big wave 3, this will be big wave 4. Usually about what? About it must not come to the territory of wave 1, this wave 1. So this wave 4 should not break up above this place for you to have a move to the downside. Can you see how we have planned GBP USD, GBP JPY in line with the what? With the bias, bearish bias that we have for the pair. So you look at it in a higher time frame from the top, and you now be analyzing it to the bottom. All right. So right now, real quick, guys, I have to show you the last one, which could be a break of structure to get your entry. That's the one you have to look at now. So if this one will still move to the upside, it then means you will have something like this, something like this. Sorry, if it has to continue to the upside, this is a break of structure already. I told you when we are talking of downtrend, you are looking for the last support that is broken. This is the last support that is broken, guys. So you want this to pull back to that area. How does it pull back to that area? Take a fib of this leg. If it ends here, for instance, let's say it ends here, we don't know whether it will still push down. Okay, then you see 50 to 61.8 here, guys. At this level here, this market correct to this level, it should have a push down. Can you see break of market structure? We are not retesting the structure. I'm not talking of market retest. I don't believe in retest. Now I can show you example where market will never retest. What I am concerned about is, has this made 50 to 61.8? Yes. Okay. Then this market, does it have a supply corresponding to it? Yes. Then this market, do I have the stochastic reset at the top because I want to sell? That's another tool that I use. You see here is at bottom, showing that the possibility of this one moving to the upside is there. That's why this one is at the bottom, guys, on this time frame. When it gets to the upside here, that's when this one will move to this area, and then you put a sell. So when you are selling, always ensure that your stochastic is at the top when you are selling. Then from here, you can sell. That's how you have a sweet sell in the market. Do you understand, guys? So can you see it now? How we have broken everything down, everything, how we have made it so clean. I'm still very optimistic that there is a possibility, guys, of you having this structure. 3 waves here, 3 waves here. I want to have this move to the upside. I don't want to sell at any level where if I look to the left, I'm seeing a bunch of consolidation, guys. These are fear level areas. Fear level areas. I don't want to sell here, especially this pullback here, guys. Look at it here. I want to take the top. It has created equal high here. I want to break the top before I will sell GJ. Okay, I want you to break it here. Once it come here, this is a premium price here, guys. Stop loss 50 pips above, boom, to the downside. Can you see, guys? It's as simple as this. As simple as this. So this is how to do a top-down analysis. So this video is going to be uploaded to YouTube. You can go there, you will watch it as many times as possible. You know, try to subscribe to the channel if you have not done so, and then make sure you don't just watch this content and not pass a comment. You have to pass a comment. Let me know your feel. If I've made mistake, tell me that I've made mistake in something. I will go back. I can do a video for that purpose and link the two videos together and correct the mistakes. All right. If you have no benefit, if the video does not benefit you, tell me that this video, you don't gain anything there. If this video is cool, tell me that, oh, this your video is top notch. That helps me to review myself. It helps me to review the kind of content I post. If you see related content that you want to see, you want me to do video on, send it. Somebody told me to do video on how to buy and sell on MT4. And I say it's very necessary because we have a lot of people who are new. I quickly package a video and I sent it to the YouTube page. Anybody can access it. As I'm telling you, people can be in Brazil, they can have access to it. It's not a must that it's only people in my group that should benefit from whatever I send. That is why I first sent it to them. I deleted it. Not only them that should benefit. I posted it in YouTube. Let YouTube share it to whoever needs the content. Do you understand? So pass a comment there, you know, share the video, and I'll be glad you did. Thank you very much, and God bless you.